Hey everyone, and welcome to From Waterloo to the Alamo. I'm your host, Traci Wilson, and today we are so lucky to have Keri Moses, Senior Vice President of Mortgage Lending with Jefferson Bank. Keri, I'm so glad you're here today. You actually are one of my first, I know Jefferson Bank is headquartered in San Antonio, and I know you'll have a location in Austin, but basically you're my first real San Antonio business, I guess you would say, on the podcast. So we're really excited to talk to you today and kind of dive into a little more about the San Antonio market, also what you're seeing in the lending world, but also hear a little bit about you. So thank you for joining us today, Keri.
Well, thanks, Traci. I'm very excited to be here because I'm just getting to know Engel and Volkers as well.
Yes, it's exciting.
Thank you.
Well, Keri, why don't we start off? Why don't you tell me a little bit about your history? Tell me about your background and how you kind of got into the lending mortgage world.
Okay. I was not born in San Antonio, Texas. Everybody
That's
thinks
okay.
I'm from San Antonio, but no, I've been there for almost 40 years, the majority of my life. And my family's originally from Wichita, Kansas. And we moved to San Antonio in 1987, and we knew no one except the realtor. And I finished up high school in San Antonio, went off to SMU, and ended up staying in San Antonio. I had the intention of moving to Central America for a job, but ended up meeting my husband on a blind date and fell in love and stayed in San Antonio. So we got married, and I was in sales, but I wasn't really happy in my sales job, so I wanted to do something else. And my husband had a great friend who actually had a mortgage company of her own. And so she and I went and met, I think, for a drink one night. And I had met her. She'd gone to our wedding. I didn't know her well. And said, hey, listen, I may have a position at my mortgage company. Are you interested? So I asked her a few questions about it. And I graduated college, but no one had ever taught me what a mortgage was. So I had no idea what I was doing when I got into the business. That was September of 1999. I got into the business.
Wow. Well, you've seen it change a lot. I mean, I feel like it's been really interesting to talk to people who have been in the real estate and mortgage and lending industry for a long time, right? At least over 20 years, because y'all have seen the market, shift, right? You've seen it kind of do this, right? Over the years.
We've been through it all. When I first got in 99, rates were in the nines. I bought my first house in 2000 and was pregnant with my first child. And the rates, I got 7.75 with 20% down on conventional loan. I was ecstatic because they were nines that summer. And then I don't know. And then all of a sudden the subprime loans came and anybody could get a loan. Like all you had to do was breathe air to get a loan. It was ridiculous. And a lot of people got in the industry because it was easy. But then we went through that. And then all of a sudden we had the crash of 09, which was bad. But I'll tell you, then we had COVID. But I told my underwriter at the beginning of the year, I said, I really think that the recovery from COVID has been harder than the 09 crash. It's been harder because it's been a tough couple of years in the real estate market.
Yeah, it really, really has. Well, why don't you tell us a little bit about Jefferson Bank? I know that they're still family owned, which I know you had mentioned earlier. That's still really rare, to have in the banking industry. But why don't you tell us a little bit about what makes Jefferson Bank different and kind of what y'all do, whether it's out of the box or what you can do to help get people loans.
Okay, great. Okay, so Jefferson Bank, the family is originally from San Antonio, Texas. We will be in San Antonio almost 80 years. We're in San Antonio, Austin for a little over 2 years. New Braunfels and Bernie are those. We have locations in all of those cities. And I think we have like 11 locations in San Antonio. We just built a beautiful new headquarters about 2 years ago, right across from the Pearl on Broadway. And it was, I think, a way for the family to let everybody know, you know what, we're not for sale. We're here to stay. And we have the fourth generation on the board of directors now. So we are here to stay. And I think I'm just the type of person, I appreciate family-owned businesses. So like all the people that come to my house, my plumbers, my electricians, my fixer guys all have local businesses. They have their own businesses. So I feel like if I support the local businesses in San Antonio, then I'm helping myself. If that makes sense.
Yeah, no, for sure. So tell me, if I came in and let's say I've been a customer with you guys for a long time and I have a good amount in the bank, but I don't have a job.
Right.
Tell me how you guys are a little different and how you're unique and how I could maybe get a loan with you, or I wouldn't be able to get a conventional loan with anyone
Okay,
else.
great. So let me start kind of from the top, because what Jefferson Bank offers, I think Jefferson Bank offers virtually anything you could possibly need that involves some sort of mortgage, something to do with your house. So let me start off the top. So we do all the normal stuff, the FHA, the VA, the Texas Vet, the Jumbo. We do all the fixed rate stuff that everybody else that you know does. But we do a lot of outside the box stuff. So let me start with one of my favorite options. And I'll just tell them real quick. So we do a HELOC, which is a home equity line of credit. It can only be done on your primary residence. And this is a fabulous tool. You can use this. Oftentimes my clients will come to me because, let's say, they're in their big house and all the kids are grown and gone and they're ready to downsize and they own their house free and clear, but they don't want to mess with having to sell to buy. So they come to me and I give them the 20+% to buy on the new house. They get settled into the new house and they're all settled. And then they sell the old house and it pays off the HELOC, and then they can take whatever rest of their money and pay off the loan with us, and we don't care. And they can do it within 30 days of them buying. So there's no wait time on any payoff of any loans that we provide our clients. So that's a good advantage.
Right.
The HELOC can be used to pay off debt. The HELOC can be used to pay off for really improve your house, whatever you do. They're awesome. They're awesome.
That's awesome. So if, let's say they are having a hard time selling their house though, what's the grace period with that?
What do you mean?
Let's say they moved into a smaller house, but their other house they haven't sold yet.
We don't
with
care.
the HELOC. You don't care. Okay.
Yeah, they just have to make the monthly payment, and it's an interest-only payment for the first 10 years. So the payment's not that bad.
Not bad. That's
Right.
awesome. And then when it's done, they can just pay it off. And there's no penalty for paying it off within
100%. No,
Okay.
no. Oftentimes it's a short-term loan. And that's the beauty of these loans, because these are all loans that Jefferson Bank will hold on their books, on Jefferson Bank. So all the payments we made to Jefferson Bank.
Mm-hmm. That's really nice. I feel like that's another thing about being still family owned is there's still a little bit of creativity you can do versus with some of these big banks, it's very black and white.
Exactly.
So tell me a little bit, I know you had mentioned your comparison of January of 24 to January of 25. What do you see? Do you see there's a little uptick in the market? Are you seeing more loans happening? Tell us what you're seeing as like a year-to-year comparison.
Well, there's a lot more activity. The end of year, I had a lot more activity. It was a rough year for the amount of time in the business. But January of 2024, I closed 3 deals, which is nothing. And that's like never ever happens. I hate to say that, but never happens. And I didn't even hit $1 million that month. This year, I have 14 deals closing for $6.5 million.
Wow.
So that says a whole lot about this market. There's a lot more activity out there.
Yeah. I think there might also be a little bit more confidence, maybe. It could be buyer confidence. But tell me a little bit about what y'all are seeing in the San Antonio market. Are you seeing y'all's average price point or just selling like this, and your higher price point or just sitting? What are you seeing?
Most of my agents that have listings are having a really hard time selling their listings right now. And I think there's a couple reasons for that. It depends on the price point. I think it depends on the condition of the house. I've had a couple of people try to go buy houses and there were some major issues with the house and the seller wasn't willing to fix it. Well, that's going to break the deal, right? The market's good. I will tell you one thing though about both of our markets. I think all the markets, the big 4 in Texas is the place that everybody wants to be, I believe in. But anyway, we're a different league. And then I believe that, well, for sure, I think the San Antonio market is better than the Austin market because I'll tell you what happened. When all of a sudden after COVID, all of a sudden the housing market went crazy. This is what happened. Austin's prices went up like this. San Antonio's went up like this. So I say when you're up this high and you fall, it hurts.
Yeah.
When you're right here and you fall, it doesn't hurt quite so bad. Does that make sense?
Analogy.
Yeah. I mean, it's really the
analogy.
truth,
Yeah.
Well,
and I think too, a lot of people like you said, when the Austin, I feel like it was more like, but when they went up so high, a lot of people started to kind of look on the outskirts, right? So a little bit more towards New Braunfels and Bernie
Buda
and San Antonio.
and Kyle and stuff like that.
So I think that y'all got almost like a a slow increase because everybody was slowly like, oh no, I'm priced out. I'm priced out. I'm priced out. I'm priced out. So, which I think helps y'all because you have more appreciation in the homes, right? Versus a lot of people who bought in COVID here in Austin are either just trying to break even or upside down.
Right.
And that's what's made it, I think, a little harder. But I know right now what we're seeing is we don't really have a lot of inventory. I don't know. Do y'all have, how about the inventory?
We have a lot of inventory. We have, I think, 13,000 homes right now, which is pretty high.
Yeah. That is high. I mean, I think too, like, for example, like in Steiner Ranch, I know there's just not a lot of inventory in Steiner Ranch here in Austin. So we're seeing a lot of renters, right? So
and
that's
the
been
rent prices are ridiculous.
Yeah, because a lot of people are just waiting for those rates to drop. I mean, I think too, a lot of people are hoping and praying that rates are going to drop this year.
Hello, my name is Macias Braganza, General Sales Manager at Mack Hike Ford Lincoln, your #1 Ford dealer in Central Texas. We are here for all your automotive needs, Ford, Lincoln, pre-owns, all year makes and model. If we don't have it, we'll find it. You won't find anybody that will work as hard as I will to earn your business. Thank you for making us #1 in Austin, Texas.
What do you think by 3Q of 2025? What do you think rates? Do you think they're going to be steady at where they're at? You think they're going to be a little lower? You think we're going to see them in the sixes, low sixes? What do you think?
I don't know. Right now, depending on down payment, credit scores, the conventional rates, and I'm more familiar with the conventional rates right now than I am on the government rates, by the way. On the FHAV, I haven't really looked at them recently, so I would not like to discuss government rates. Sorry.
That's fine with me.
The conventional loans have been either right at, like, the low sevens, right at 7, or in the high 6s. Like, I locked somebody down at 6.75 this week, so that's not so bad. But what people don't realize is I looked back, the average interest rate for the last 50 years is 7.5%.
That's so interesting. 7.5%. Okay.
So if I just tell my clients, if I can get you below average, we're doing pretty well.
Yeah.
So what happened, unfortunately, and I think the younger generations that are younger than me, that they don't know where rates actually should be hanging out, which is where they are right now, in my opinion. I think 5s would be like really, 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 really good. I think it's gonna be a slow progression for rates to fall. But
you were saying you thought this is the time to buy.
Oh, without a doubt.
And I know we were discussing that earlier about the rates, you know, even though you lock someone in at a 6.75, you're below average, but you made a really good point. This is the time to buy because you're not going to be going up against 20 multiple offers, waiving inspection fees. Sellers are actually willing to fix things.
Exactly. It's no longer a seller's market. It's more of an even playing market. That's why I tell my clients, you know what? I know that rates have doubled from a couple of years ago, but I honestly think now's a better time to buy because you're not competing with 20 other buyers. You're not going to way overpay for a house. You won't even pay for an inspection because the seller won't fix the thing, and the seller will not pay title policy. So you're going to you're way overpaying, in my personal opinion. So now it's more of an even playing field. You do need to get inspections. Sellers will make repairs, and sellers are paying for closing costs, and most sellers are paying for title policy.
Yeah, for sure. I mean, I think you're probably saw a lot of, I hate to say lawsuits come out of that COVID market because, you know, I remember one of our attorneys advised us, like, do not waive an inspection. Like, that is such huge liability regardless of what you're doing. It's just crazy. Even as the seller, like, hey, I'm advising you against waiving an inspection.
Right.
But, you know, a lot of people did it, you know, and I think you are probably going to see some repercussions from that here.
I think so too. And one more thing, we'll go back to Rachel because I recall what I was going to say. So for the younger generations, here's the problem. From 2009 till March of 2022, after the big banking crash of 2009, the federal government bought mortgage-backed securities and kept rates artificially low for 13 years, which was kind of, I guess, a good thing for those that were buying during that time period, but it was very unrealistic. And so people were unfortunately kind of fooled in a way, I think, by rates.
Yeah.
So this is where rates should be. 6s, maybe 5s. I don't know. We'll just have to wait and see. There's a lot going on right now in the world and the country.
Yeah, there is. There's a ton. I know, because it was, you know, I remember when we first bought our house, we just did a 5-year ARM.
Just to get that lower rate.
And it was low. It was like 3.5, which was like awesome.
Right.
So we got really spoiled
Right.
we did that. We sold our house within 5 years, and then we sold it right before COVID, and then we
Right.
built during COVID, which
Right.
was just chaos. But we did a one-time construction loan, and we locked in at a 2.875 rate.
That's awesome. So let me tell you about one-time construction and construction options at Jefferson Bank.
Yes.
So we do lot loans, and we have one option on the lot loan. We kind of, through the years, as things have changed, we just kind of used to have all these different options. You could do this, and just kind of made it complicated. So we've simplified it. So the lot loan is the down payment is 25%, and the interest rate is 8.75.
Yeah.
And it's a 15-year fixed rate loan with no prepayment penalty.
Okay. See, that's decent, because a lot of the times you buy the lot, and then once you build the house, what we did was we wrapped up our lot loan into
And you can do
loan.
that as well, just depending on how you decide to do it. You can do that as well.
Yeah.
And we also offer a one-time and a two-time close on construction. So you have an option of either or.
So the 2 times, so tell me the difference between, like, because what I did was a one-time construction loan. We closed, we funded, and then we just got draws. And then at the end, we had to do that, just a few different paperwork, sign, notarization, and then it was officially official. Tell me about the 2-time close.
So the two-time close is, I used to think this was the best option ever, but I've recently learned about the one-time close, and I like the one-time close a lot better. But anyway, the two-time close, so you close, the interest rate's higher. They only give you 1 year to build your house. And if the house is not built in a year, because most of my houses are taking more than a year to build, then you have to renew the loan, get a new appraisal, and you assess some more costs. And then once the home is complete, at that point, you'll convert to a permanent loan. But on our one-time close, the current interest rate is 6.75%. I don't know if I should be talking about rates, by the way, on the
Well, you can just say
podcast.
currently. In this today is
Right.
fine.
Currently today is 6.75%. And you have 2 years to build your house, which makes perfect sense in this market, in my opinion.
Yeah, it does. I think that's
That gives you more time, because all builders like to tell you that they're going to do it quicker than they do. Maybe sometimes they run on time, and some can do it quicker than others. But in general, most, especially in the higher, more expensive homes, definitely take more than 12 months.
Yeah.
I think.
Well, and I guess the nice thing too about the one-time construction loan, which I loved, is like we locked in at a low rate. They did our credit score. We did everything. And then after that, it was just, we just had to sign the paperwork to convert.
It was easy.
We didn't have to do another credit check. We didn't have to get pre-approved
New
again.
appraisals, nothing like that.
Nothing. But we also were lucky because we had so much equity in the house.
Right.
But
you got a smoking hot interest rate.
and smoking hot interest rate. But it was I'm definitely feeling that with my taxes right now, though. I'm like
Ouch.
trying to,
Ouch.
hey, we did a one-time construction loan, and this is when we converted to permanent. But yeah, the 2-time is interesting, because I feel like that's also a way, if rates do get better, right? You could lock in at a lower rate.
Right. I think it depends on your interest rate. But right now, I am selling that one-time close to all my clients. Because guess what? When the home is completed and the rates are lower, then we'll just refinance you to that lower rate.
Yeah. And I think people get
That's okay.
people get really scared to lock in at a rate, and then you say, oh, we'll just refinance. They're like, oh my gosh. And it's actually not that bad.
No.
I mean, it's not that much more money. And I always say date the rate, marry the home. So why would you not, if there's an ability to get a lower rate?
Hey, I'm Brandon Sparks with Nautilus Lending, based right here in Central Texas. We're a full-service mortgage operation and brokerage, serving Greater Texas as well as Florida and Tennessee. One of the greatest things about our shop is our ability to facilitate creative financing. What that means is that anything legally possible, we can get it funded. You want to find out more? Reach out to us, www.nautiluslending.com. That's www.nautiluslending.com.
And one thing that's nice about our loans that we do in-house, that we hold on our books, is oftentimes my clients are selling another house, but they still qualify with the new house and the old house, right? So I've got some clients doing that. Well, he's got several $100,000 equity in the house. So this one-time close is a loan that Jefferson Bank holds on their books. So we're not going to sell that loan. So we're going to hold on the books. So he's going to have $300,000. So we'll do what's called a recast. RECAST. It's not a refinance. So he brings the $300,000 to Jefferson Bank. So hopefully he's got an account with us, right? He just puts it in his account with us. And we will take that money, apply it to his current loan amount with us, reduce his loan amount by the $300,000, and re-amortize his loan at the exact same interest rate as 6.75. And all you pay for is a new deed of trust and recording fees, about $311.
Oh, wow.
So that's a really good option.
That's a really good option.
And some of my big, just primary, I've got a guy buying at North San Antonio across the Dominion, big $1.6 million house. He's putting a little bit more than 20% down, I think 30% down. And he's going to be selling a big property, and he's going to go on our portfolio loan, which is a 30-year amortization, but it's a 7-year ARM. So the rate's fixed for 7 years. He's like, I want to have this house paid off in less than 7 years, so I'm going to go that route.
Yeah, that's so interesting. And that's something that I think is nice when things are, like you said, the real estate market hasn't been great the last couple of years. And
it's been tough.
You can feel it also too in the economy. One thing we discussed was Austin's the cost of living went up so much, but a lot of our workforce, a lot of our employers haven't kept up with the
wages.
Right? So, and it used to be, usually it's demographic wise, this scale of pay, right? New York, people who live in New York, because it's a higher cost of living, they get paid higher more.
Right.
The guy in New York and the guy in Austin are doing the same job.
Exactly.
But Austin has not quite caught up with that. And so you can tell people are hurting a little bit with just the inflation and whatnot. So it is nice to know there's a bank if something you do want to try to get creative with. I have this much in the bank. We can reduce that.
Yes.
Pay this.
So that's another thing that we do at Jefferson Bank, which is great, is we do what we call portfolio loans. And a portfolio loan's a conventional loan, but again, it's a loan that we'll keep on our books, because all the fixed rate Fannie Mae, Freddie Mac, VA, FHA, we will sell it after closing and funding. We sell those loans and you make your payment to somebody else, but we'll hold it on our book. So for instance, about 8-9 years ago, a very successful female OB-GYN retired at like age 54. Well, that's too young to get into your 401k. That's really way too young for Social Security. So you really can't get into any of your assets quite yet because you're too young. And she had gone to her bank that held all of her money, and they said, no, we can't help you because you don't have a job. Well, she had $4 million in the bank and had a perfect credit score and was putting 20% down. So Jefferson Bank looks at that and says, that woman is going to pay her mortgage. We're not worried about it. So we have a calculation we use, and we can use your assets as income. And I had a guy a couple of years ago moved to Houston for a new job, and they were building a beautiful new house for the new job. And the house was almost done, and he got laid off from his job. Well, guess what? He had $2 million in retirement in 401k, so I was able to give him a loan.
That's awesome.
And he went and got another job, so it was okay.
It was okay. Yeah, you had that other extra layer of security. That's awesome. And I think that's what makes banks like Jefferson Bank so unique, is because you can be a little bit more creative and a little more progressive with how you help people. Because, at the end of the day, I know you had said, like, you love it because you're helping people.
I love to help people
buy a home, right? And I always say this every time on the podcast, but buying a home is one of the biggest investments anybody will make.
And it's a very personal process because guess what? When they come to me, I know everything about you.
Yeah.
It's like I'm looking in that door I'm not supposed to be looking in. You know what I'm saying? I don't want to say it out loud. You know what I'm saying? Because we check your credit, we look at your income, we look at your assets. You know what I'm saying? So most of your friends don't know this about you. You know what I'm saying? So it's a very personal thing. And I treat that's the whole Jefferson Bank. Our little thing we say is this is personal to us, and that's in every department, because I was just brought up that you treat people the way that you would like to be treated.
Right. No,
and
for
that's
sure.
really how I like to live my life.
Well, and it's emotional. So it's personal, but it's emotional. There's nothing worse than being like, oh my gosh, my credit score's what? What? Well, that was from what? A Spectrum box I didn't return. That's not true,
I think I'm still holding on to my Spectrum paperwork for my return just to make sure they don't come after me, because I've heard horror stories about Spectrum.
That did happen to my husband, and we were like, what? What? This is why we'll just do streaming television now. But I mean, there's nothing worse when it's how do you get creative? And I think that's something that's also unique about Jefferson Bank is I could come to you and be like, Keri, what do I do? how do I fix my score? Help me figure out ways that we can go around this.
Right.
And I feel like at some of those big box banks, it's really hard to find that personal connection.
Well, they're just ready for the next client to walk in the door. I think,
right.
you know?
For sure. Okay, so 2025 projections. Anything you want to leave people with? You think 2025 is going to be a better year? I mean, January 2025 for you, it already seems like it's kind of looking up.
Yeah, I think so. I think we're starting the year off much better than we have. I just think that we've just been through a lot the last few years.
Yeah.
I think, the pre-COVID stuff and all that, everybody keeps using COVID as the excuse. It's been over. We're going on 5 years now, guys. We need to move on.
Right.
And rates are going to hang out where they are. And I think the longer you wait, the more you're going to pay.
Mm-hmm.
So for those people that are on the fence, and I had an agent call me yesterday. She's like, I've got some people that are willing to pay $8,500 a month in rent. So if they go buy this $800,000 house and put 20% down, how much is their payment going to be? And I go $5,200. So think about that before you go, I'm going to rent, 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 I'm going to rent.
Yeah. Mm-hmm. And at least I always tell people, think of when you're buying a house, think of your mortgage like a little savings, little piggy bank, right? Like the whole goal is to recoup that plus some, right?
Right.
And it's crazy. The rent rates are just insane right now. But, I know none of us have a crystal ball, but
I think 2025 will be better. And I really think that the Austin housing market will level out eventually. Mm-hmm. It'll take some time. But if you're in the real estate market in Austin, well, guess what? You've got a lot of nice surrounding cities that people are interested in buying in. You know what I'm saying? And they're also joining the Austin and Texas Board of Realtors to make it one big Board of Realtors, from my understanding, which I think will be really good, because I think Austin and San Antonio need to work together. You know what?
Yeah.
I think so, because we're just right down the street from each other.
Yeah. Well, and I think we're really kind of ping-ponging back and forth a lot of residents, right? I mean, people who are working in Austin that want to live in Kyle, and then they're having to be pushed out a little further to San Marcos. And then
a lot of people from Austin are moving to San Antonio.
Yeah. A lot of people are.
A lot of Austin natives.
And it's just a little bit more of an attractive market right now, just because of the home prices. So
the prices are more affordable. There's a lot of inventory out there. But I tell my clients, I said, you know what? If you hire a good agent, this is why houses always start. You don't see a lot of new houses coming on the market right now, but it's always after the Super Bowl. Did you know that? And do you know why?
Why? Tell me.
Okay. So the holidays, you don't want to list your house during Christmas. You don't want you have to keep your house neat and clean. You're trying to get all your presents wrapped, and it's just, Christmas is just so much work. And then Christmas is over. You love putting up the decorations, but you love taking them down, right?
Yeah.
But January, so then you call or you talk to your real estate agent pre-Christmas, so you know what you need to do. So whatever your real estate agent tells you to do to get your house ready to put on the market, you really need to listen to. I've only sold one house in my 26 years in the business, because I don't like to move. But I did exactly what he asked me to do, and we sold it very quickly in a down market. So I think those homes that are good looking and priced right, and the sellers don't think it's a seller's market anymore, and they're being realistic about the current market is, I think that you will get your home sold.
Yeah, for sure.
And just let them know about interest rates.
Yeah.
They're below average.
You can, I think that at this point, all you can do is educate and try to advise. That's why we call ourselves real estate advisors. Is just to advise them on the best course of action for them in that life. I had one client that was like, I just need to get my equity out. And I thought that was just the best. That was just like exactly, he was realistic. I just want to get my equity out of the house.
Okay, and there's a good way to do that Jefferson Bank can help you with. I'm glad you mentioned that.
Oh, good. I'm glad. Let's hear it.
We're on the same wavelength. Okay, so besides the HELOC, which is the interest-only 20-year AM, the first 10 years, and I personally took out a HELOC myself about 8-9 years ago. We took out a flat $100,000, did a remodel of part of the house. We paid it off. We used it at a place we got out in West Texas. Used it, paid it off. We needed it for our income taxes 1 year. One time, one of my 3 boys got in a little bit of trouble, so I had to use it for his attorney, but he got out of trouble, so everything's good. So it's a great thing, but it just depends on the person and their income and how they get paid and stuff like that. So if you're a normal, salaried person, the HELOC's not what you do. So we've got several other options for just a second lien HELOC, because most of my clients right now that need to pull their equity out have, like I said, a smoking hot interest rate on that first lien that you don't want to refinance. So I'm helping the principal of my youngest son's high school in San Antonio, when they moved here in the beginning of 2020, and she's actually from San Antonio. They've been working in Florida for years and years, but she moved back just to get home close to her family. And this is over my neck of the woods, which is the Alamo Heights area of town. They had to buy way out in Stone Oak. It was a lot cheaper for them and all of that. So they got this awesome house way out in Stone Oak, 2% interest rate on that house. So they've got tons of equity. So we had lunch a week or two ago after school started, and our boys are about to be 16. And her son misses out on a lot of what's going on because everybody lives so close to one another and they live way out. So they want to buy a house in our neck of the woods. So this says, this is what we're going to do for you. What we're going to do is not going to touch that first lien, but we're going to do a second lien on your house. And it's going to be one that will hold Jefferson Bank. And the best option, in my personal opinion, is the 8.5% 15-year fixed rate second lien that will go up to $250,000 on with no prepayment penalty. You can also do that same loan in a 30-year amortization, but that rate is 7.5, but it's on a 7-year arm. It's not bad.
Yeah.
But on the 15-year fix, we'll go up to $250, but on that 7-year arm, we'll go as high as you can possibly get with that second lien. So that's a really good option, just to pull out some of that equity.
The equity on the house, yeah. And then you pay it back. Yeah, that is actually a good option.
And I've been able to help a lot of people recently with that. You know, people that got into COVID debt, you know, because they were online shopping too much during COVID.
Yeah.
They were sitting at home with nothing else to do.
Yeah.
Which is easy for all of us to do, right?
It is.
You know, sitting there, I'm like, what are they? Oh, I got something. You get an email. They're giving a big sale. You start, oh, that's cute.
Oh, that's great. Oh, that's nice. Well, it's been so great talking with you, Keri.
So sweet. Thank you so much.
And
thanks for the opportunity.
Yes. And to learn a little bit more about Jefferson Bank, it sounds like it's a wonderful option if you are looking to buy, you know, a house and someone needs to get a little creative and you want to work with a locally owned, right?
Yes.
Bank, then Jefferson Bank would be the place to go. And you said there is a location here in Austin.
Yes.
And then 11 in San Antonio.
Yes. And we have like a loan officer in New Braunfels, a loan officer in Bernie, and we have loan officers in San Antonio. So we're kind of all over the place.
You're all over the place.
Yes,
yeah.
we are.
Well, awesome. Well, Keri, thank you so much. Your expertise and your insights really helpful. And
thank you.
I enjoyed the conversation.
This was
so
fun.
thanks for joining
Thanks
us.
so much.
Yes.